Alright, let me ask you this. What's the difference between traders who struggle and traders who become millionaires? It's not luck, it's technical analysis. With Bitcoin hitting new all-time highs, Nasdaq hitting new all-time highs, and the entire crypto space exploding, there's never been a better time to take trading seriously. In these moments and these opportunities, average people can become millionaires if they have a proper plan. Last year, I shared setups like AR, which had an increase of 500%, Sheep with another 400% increase in price, and very recently I shared Link with another 200% increase in price, all using very simple technical analysis. In this video, I'm breaking down everything you need to know to master support and resistance and eventually be able to spot game-changing setups yourself. So let's now finally move on to what we traders love so much, and that is technical analysis. In this lesson, I'm going to give you an introduction to technical analysis. And we have all seen all these fancy tools. When we look at TradingView, we can pull fixed ranges, we can look at Fibonacci pulls. We also have a variety of indicators like we can see here, the 100 SMA. But what actually is technical analysis? So the definition is that technical analysis is the study of past data, primarily price and volume, to forecast future price movements. Hereby, the focus is always price charts, historical data, and that means we can see historical data for a variety of assets. Here we're looking at Bitcoin, and we can see we get a lot of historical data here on Bybit, even starting in the year of 2018. Okay, so we have other traditional markets that have even a lot more historical data than this. Besides that, we look at patterns, I myself love this pattern. It's previous supply and demand, for example. So we look at how previously price reacted to supply and demand zones to try and make a decision in the future. So here we can see this previous supply zone has been flipped into demand. We can have a quick look at ES, which is doing the exact same. We flipped supply into demand. We've seen the same pattern up here. Supply has been flipped into demand again. And that was able to be identified with knowing historical price data, where we did that many times in the past. Here we flip this previous supply zone already into demand, which for us traders offers a great opportunity to take a trade. Yeah, what are assumptions of technical analysis? So we do have a couple of assumptions which are good to know. And no matter your stage of trading or where you are at the moment, I think that anyone can learn something in this video. Maybe it's even the assumptions of TA. So we have an assumption that market actions discounts everything, and that means all known information is already reflected in the price, and that is based on one of the core principles of the efficient market hypothesis. Okay, so that suggests that asset price reflects all available information, and that is very important to understand when we look at technical analysis. We also assume that price moves in trends. So price moves in trends that can persist over time. So let's have a quick look at Bitcoin once again, and we can see very recently we are trading in a nice uptrend. We can do that on the 4-hour time frame. And moving in a trend means we are identifying if price is trying to go up or trying to go down. And here we can very simply see that price is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and so on and so forth. So this is a very clean trend we are still trading on Bitcoin. Besides that, we assume that history tends to repeat itself. So patterns often reoccur due to market psychology. This is something I will touch on in later videos as well, as The psychology in trading is a very important and key factor as well. And one of the key reasons for us to look at technical analysis is that we get real-time insights and we can make very quick decisions based off technical analysis. So here we can see we can go down to low time frames such as the 30-minute time frame and get insights into every 30-minute auction. And that allows us to make a quick and informed decisions on every single time frame using technical analysis. For example, down here, this is a great example. We have been trading or looking at a low time frame channel. This is the channel high, this is the channel low, and we've seen an SFP. We can see on the 30-minute time frame, we get real-time data. We see the market is trying to break the channel low. However, it failed to do so. It failed to get follow through. For us as traders, we get instant data on this and we can make a quick decision to be looking for a long trade down here, as this auction to the downside failed to get follow through, and we as traders can anticipate this price to rotate to the other side of the market. In this instance, we can even see that we have done the exact same scenario on the opposite side of the range. So we have SFP'd the previous range high. Once again, on the 30-minute time frame, price failed to get follow through. We got our SFP entry confirmation and were able to take that short trade and at least hit a take profit 1 on the middle of the channel. Okay, so this is why we as traders are able to make instant decisions just by looking at the data that is presented to us. And we can also identify pretty simple entry and exit points. This is a major advantage for us as traders as opposed to investing long-term into an asset, because we can look at the actual candle data. We know exactly where to put our stop loss, and from using technical analysis, we exactly know where to take this trade into. For example, it's a very simple tool. It's looking at a horizontal channel, and that means at the range low, we look for long trades. At the range high, we look for short trades. The take profit is always the middle of the channel. So here we can see long trade, hit a take profit 1, hit take profit 2, and the short trade, hit take profit 1, and then we were stopped out at break even, since after hitting take profit 1, we would always de-risk that position. So this is the power of using technical analysis just by looking at these simple tools. And if you only learn that trading a range on crypto, or actually on every market, is an extremely powerful tool, you already learned something in this video. And that being said, let's have a quick look at a comparison to technical analysis with fundamental analysis. The technical analysis focuses on charts, trends, and market psychology. For fundamental analysis, we focus on company data, financials, and intrinsic value. That is something we can include for our technical analysis, but we don't have to. Especially if we're trading on the lower time frame, we don't necessarily have to do the fundamental analysis, because all the data we need as traders is already given in the chart. And technical analysis is much quicker as opposed to analyzing the company data for an entire year, for example, to make a decision, and therefore preferred for short-term trading. And for a conclusion and the next steps, technical analysis is essential for short-term traders, helping them make informed decisions based on price action. And what I want to do next is look at support and resistance and show you the levels that can give you an insight into the markets, what to look for, and how to identify these setups yourself. So after deepening the understanding of what technical analysis actually is, let's have a look at some support and resistance tools that help us spot high confluence areas of support or high confluence areas of resistance every single day to profit in these markets. First and foremost, it's important to understand what support actually means. And support is a price level where a downtrend is expected to pause because there is demand coming in. This down here on the channel low was an example of a support zone. And we can see this support held, we had demand come in that pushed price to the upside. Conversely, a resistance zone is a price level where an uptrend is expected to pause due to selling pressure. And this right here is a good example. We've had this buying pressure that pushed price to the upside, and up here we clearly got selling interest and sellers trying to push price lower. So what is actually the psychology behind support and resistance levels? So buyers see this level down here as a good buying opportunity, and they try to push price to the upside, expecting their position to increase and with that make a profit. For resistance levels, sellers view this level as a good exit point, which is increasing supply or even a good point to short trade a market. Because as I previously explained, for us as traders, we don't need to see the markets go up forever. We can long trade, and that means expecting higher prices to come, or even short trading, meaning we expect lower prices to come, and we can even profit from that. So let me now give you a couple of insights into what technical analysis tools I like to use every single day. And for that, we can once again look at historical data and try to translate that information into the new data that we're getting to make an informed decision. So for us as traders, it's always very important to look at high time frame highs and lows. So with that, we can look at a high time frame chart such as the weekly time frame here on Bitcoin. And if we mark out a previous significant high, which was our old all-time high at 69,182, we can see that even that was 854 days later, this high has been a very significant point in the chart where price was again finding supply and traders took profits or took short trades to defend that level. We can see previous high still acting as resistance even years later. Now we can look at the same principle a little bit more local. So a previous low can be a very good level of support. If we go down to the lower time frame and check this price action right here, we can see how well respected this old level has been over the next couple of weeks. After price was retesting this level for the first time, we had another auction to the upside. We then got the perfect retest of this previous low, and we formed this higher low, which led to another subsequent move to the upside. Now, for identifying these levels, it's very important that we focus on levels or highs and lows that were significant lows, after which we have seen a nice and impulsive move away from that level. We don't want to look at any levels in between because that is too insignificant. We want to look at very significant points at a low of a range or at a high of a range, as I was showing with this previous all-time high on Bitcoin we have seen up here. Besides that, we can look as ranges. So whenever a market is not trending, that means not forming higher highs and higher lows or lower highs and lower lows, price is typically forming a range and consolidating in a range. So for that, we can use our channel tool in TradingView and analyze this price action here for the previous all-time high range. So we can see even weeks later, price was respecting this range low. So we anchor it from this high, connecting to this high and this low right here. So this subsequent move to the downside found another support at this previous range low. And then we can even see that after weeks or years or months of price action, price is still respecting old channels. And there is a saying that we as traders should never delete a well-respected channel. And I can 100% confirm this statement. As we can see here on Bitcoin, this previous channel acted as resistance. Then we got the reclaim, and finally we are getting the break out of this previous channel. So we already have significant highs, significant lows, and channels. But besides that, there's one tool that I really like to use, and that is what I already mentioned, which is previous supply and demand zones. So for this, I was already showing a high time frame example on the S&P 500, but this is also applicable to the lower time frames. Or let's now do this for Nasdaq, for example. We can see this high time frame, previous supply zone was flipped into demand, and this bounce was then rejecting the previous demand zone. So the same theory, just vice versa. If we have a previous demand zone, which is characterized by buying interest stepping in around this level, losing that level, and then retesting this at a later time. So we can see previous demand flipped into supply. But now let's have a look at this on the lower time frames and see how well this is respected even on lower time frames. Here we have a great example on Nasdaq. So here we clearly had previous buying interest step in. This is identified by wicks into the level. So we've got 1 wick into the level, 2 wicks, 3 wicks into the level, and buyers were trying to defend that level. At some point, however, this previous demand zone was lost and backtested. So this previous demand zone was flipped into supply for another subsequent move to the downside. A few days later, Nasdaq managed to reclaim this level and flip this, which is now considered to be a supply zone, back into demand. So this is one of the most important tools I use on a daily basis, which is called supply and demand flips. This is what I teach over on the website. I have a full course on supply and demand zones, how to identify these levels and how to trade them. So besides these levels, we obviously have our wonderful volume analysis as well. So for this, I want to have a look at this recent range that was formed on Bitcoin. So when we look at volume, we also have simple indicators such as the fixed range volume profile. We anchor it for this start of this consolidation range and pull it across to current price action. Now this gives us insights into where 70% of this entire volume in this range was traded. And that is indicated by the value area high, which is this orange line, and the value area low, which is this orange line down here. And we can already see how well this value area low was respected. Now this red line is the point of control, and that means this is the highest amount of volume that has been traded horizontally in this range where I anchored this fixed range. So for us traders, it's extremely important to merge our technical analysis like supply and demand zones, previous highs and lows, but also look at volume analysis like fixed range tools. I know that many traders also like to look at indicators when it comes to technical analysis, and for this we can, for example, use a simple tool like the SMA. For the SMA, we have different lengths, and this one is looking at a 100 simple moving average. So we can see, even by popping in a simple indicator, we've had an amazing trade down here at around this 39,000 zone on Bitcoin. We've had a beautiful retest at around 59,000, and then we finally lost it and formed this range. So this is another great tool we can use. And for me, I would always like to merge or find confluences using different technical analysis tools. So let me have a look and give you an example for a trade I myself would be interested in. And that is looking at the Bitcoin chart. We can identify a previous supply zone. This is very easily being identified here because we've had supply come in once, twice, 3 times, 4 times, 5 times. And what did I say? Especially the supply and demand flips can offer great trades. And here we can see that this is lining up with the 100 SMA on Bitcoin as well. So another tool I could use, because I already explained that, is the fixed range. And I can see the previous fixed range value area high is also lining up with this zone. So that down here becomes a very interesting level of support on Bitcoin, which will be around $72,000. Now you can do that across every chart. Use these simple technical analysis tools and find high probability setups and then plan on taking a trade if that level is hit. If you obviously want to learn more about these technical analysis tools, we have covered everything on the website. We have hundreds of videos covering every single technical analysis tool you can use to profit alongside us. But if you're looking for a simple insight into leveling up your trading career, in my opinion, this is the tools you want to focus on. You want to buy at support and you want to sell at resistance, and that is already, let me tell you, way ahead of the curve. So see you in the next videos.